Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, in today's game plan, we're going to dissect some of the economic data. We're also going to take a look at key movers and shakers with trade levels for you guys with actionable opportunities. All right. So, again, as always, folks, we focus on the data and the charts. No BS, no hype. It is what it is. So, first things first, yesterday we saw a significant rally in the markets, S&P up 1% on the day. This was on the back of the CPI data. Now, tomorrow morning, we'll get the PPI data. We'll see if the producer side is showing inflation. Now, remember how this works. It usually starts in the producer side, meaning that the producers of goods feel the inflation first, and then eventually they pass it on to the consumer. So that's why the PPI is important to watch tomorrow. In addition, this CPI data that came out essentially put it to a lockdown that we will see a rate cut in September. In addition, there is now 3 rate cuts potentially estimated by the Fed Watch tool going into year end. So again, it's amazing to watch how the data and the mindset of investors has now flipped from what Jerome Powell just said a couple weeks ago to basically saying, he was saying he was very cautious about inflation, yet this CPI number, which even this core minus food and energy did show an uptick in inflation, but the markets have made up their mind. They're going for a rate cut in September. In fact, I want to show you guys this. So what we're going to do here real quickly is flip over to my homepage here. And again, the reason I'm doing this is because I want to show you guys, if we scroll down, there's a couple things. So number one, there's the inflation data right here. Where was inflation? Let's click on this and take a look. So you can see that this is why the CPI data was muted. Gasoline falling 9.5% in the month. And now remember, that's why the regular CPI, which takes into account food and energy, was basically in line or slightly better. This is really important, guys, because if you look at the rest of the CPI, you can see, again, there's a lot of inflation here. A lot of inflation, but this really anchors it. And that's why, again, when we got the core number and you remove food and energy, i.e. gasoline, you actually saw inflation upticking. So things like that are very, very important to take note of. In addition, we can go down even further here. Let's go back to the homepage, scroll all the way down to the Fed Watch tool. And if we click on the Fed Watch tool, look at this. The market is now basically saying as close to 100% chance of a rate cut in September, 99.9% chance. I don't know if I've ever seen that, folks, this far in advance. We're basically a month plus out, and the markets again are saying there is a basically no chance of no rate cut. We are going to get a rate cut in September. And then look at October. October is actually close to 70% for another rate cut. And even December, the December meeting is favored to see a rate cut as well. So again, these type of things, you have to pay attention. You may say, wait a minute, why did the markets rally yesterday? Number one, the economy, yes, it's slowing. The jobs market is slowing, but we are seeing, again, inflation, at least to the investing public, they're not concerned enough, and then they're rejoicing over rate cuts that the market is now pricing in. Now, the question is, on the charts, does this change anything? We're going to take a look in just a second. But that is something else, folks. I'll tell you, that is quite something to behold, to see the odds favoring a 99.9% chance of a rate cut in September. All right, S&P futures chart. Let's jump right in here. Taking a look, what do we have? The S&P is gently floating higher today, very reminiscent of what we've seen in recent weeks and even months, where the markets in the overnight generally float higher. And then oftentimes early in the day, we'll see some selling pressure. We even saw it yesterday. So this was the CPI data release right here. You can see we talked about how there was a little insider information that slipped out on that CPI data as the S&P futures rallied up into that release. Very obvious that people had that number ahead of time. Not me, not you, but there were certain people that knew that number was going to come out, that was going to be good for the markets. We then did see, when the markets opened right here, a sell-off Again, oftentimes that's when the volume is heaviest. That can be some institutions unloading. And then once they shut off the faucet, and then we saw the markets floating very securely, grinding higher all day long. From that point on, you can see again, this is where we closed yesterday, and the markets again are higher this morning. All right, now let's go to the S&P daily chart and take a look. What do we have here? So there is an update that I need to give you based on pure technical analysis. We did close on the S&P above the bear flag high. So what does that mean? I've talked to you guys about this. I even set the stage yesterday saying, guys, if you close above the bear flag high of the flagpole, that negates the bear flag. In other words, this is no longer considered via technical analysis to be a bear flag. All right, now having said that, look at where we closed yesterday. We closed right on this parallel trend line. The last time we were here, we saw a pretty dramatic sell-off. What will we see today? Will we be seeing a market that ends up selling off, or will it close higher? I need to see confirmation above this trend line to really believe it is a firm breakout. Now, if we break above the parallel, where is the likely upside target on the market? A couple places that I'm looking. So one of them would be connecting these lows here, and this would give me my next target price. All right, I'm going to erase these two arrows just so it stays cleaner for you guys. And notice, guys, listen, notice that I was liking the bear flag on the S&P 500 because that was the dominant force, right? We saw that on Bitcoin, and it played out beautifully to the 111,800 level. So I am a steward of the charts and AKA the probabilities. But once a bear flag is negated, it's negated. It just is. Now, again, we still have the parallel here that we'll watch and see what it does. But again, you can't just hold on and say, oh, well, the bear flag is, I'm just going to continue to believe in the bear flag. Like it just isn't there anymore. So you have to go and say, okay, it's no longer a factor in my thesis. Now, the parallel is still there, but we have to monitor that very, very closely. All right, so back to the charts we go. If we do confirm above this parallel, this is a beautiful trend line. Look again at this price action here. You have this low to this low to this low. All of that would then yield the possibility that if we were to continue up here, we would go to about the 66 to 6,700 level on the S&P. That's a great trend line right there. Fantastic trend line. Again, upsloping low from October of 2023, which, by the way, is where the parallel channel started, to each subsequent low until the breakdown of the April Liberation Day collapse, right? And this essentially would be a retrace to the scene of the crime. And so what I'm saying to you guys is that if we confirm above the parallel channel, you should grind higher, probability-wise would favor that, to about the 66 to 6,700 level. Now, granted, that's only another 150 to 200 points or so higher on the S&P. It's about 3%. But nonetheless, that would be your next upside major resistance level, where basically investors would start to see whether the bulls or the bears win out at this next battle. And that's really what's going on here, right? Each level that's technical resistance or support is a battle between the bulls and the bears. All right. Now on to the US dollar. The dollar is inching a little bit lower, still stuck within this kind of range here. One little tidbit, and again, this isn't neither here nor there, but you can see right here that you have this little pivot high to pivot high. We broke above it, and now we're kind of holding there. Now, again, is this tradable? Not for me, right? I mean, you're still stuck between two major resistance and support levels here, but I just wanted to show why the dollar is kind of hovering right in this level, because again, you have this this was actually an inverse head and shoulders right here. You broke out, and now you've retraced to the scene of the crime, aka the neckline of the inverse head and shoulders. So there is support here, but it's not for me tradable at this point because it's still within a bigger range. The 10-year yield yesterday actually ended higher, even though we had that inflation muted data. At least the market took it as muted data. Again, as I discussed earlier in this game plan, really you have to, you want to do an in-depth deep dive. But listen, the markets want to believe what they want to believe. And so price is truth. We always have to remember that price is truth. It doesn't matter what you or I think, whether the numbers we think is faked or whether we think they're skewed or whatever it may be. Whatever the market does, that's just truth. We have to trade what is there. Now, it doesn't mean that down the line the market won't have a come to Jesus moment, right? Where it's like, holy cow, this is now a major, factor, and we're going to start believing that those numbers weren't real or that inflation is more inbred in this market. But at least for this time, the markets are willing to sweep that under the rug. In all fairness, we got that jobs data a couple weeks ago where they had these massive revisions, right? And has the market basically sold off for one day. One day on we were selling off the previous day, but that was before the jobs data. You had one day, and then the markets resumed their grind. And granted, it's been a grind. It's not like the markets are going up 2%, 3% a day. It's been more of a 0.25% type move, but consistent until yesterday, where we got 1% on the S&P. All right, so let's continue on here. Again, what type of pattern was this? This was a bear flag, and we're starting to see it play out. So again, it shows you that while bear flags can be negated, there's a probability to each one. So if you aligned 10 of this type of pattern, including the one on the S&P, about 7 of them would play out to the downside, while 3 of them or so would not. And again, that's a 70% ratio of bear flags when you have a good bear flag to not. And I think that's really, really important here to understand. So in the case of 10, the S&P was one that didn't, but then you look at 9 others or 8 others, and most of them would play out. All right, let's talk Circle, guys. Yesterday, let's talk about what I gave you guys in yesterday's game plan. In yesterday's game plan, I gave you a short on Circle based on the gap on earnings, saying that this 187 to 188 level was going to be a good day trade short. Look, this was the level I gave you guys yesterday. We went right up there. Look at the sell-off on Circle the rest of the day. Now, I'm going to break down to you. You guys know, listen, I always try to call out shady things in the markets. Yesterday, we talked about how, again, the data, is it truth? Is it shady? What's going on there with the data? Is the data going to even be trustworthy, or are we going to be the new China in terms of no one believing our economic data? On Circle, I'm calling them out today, and I'm going to tell you why. Because they reported earnings yesterday morning. The stock gapped up. Great gap up. And I'm sure there were a lot of investors. In fact, the volume was massive. So there were a lot of investors that bought up here. Now it came back in, and most people would say, okay, well, it's just the way the chart worked. I mean, price just sold off. I mean, people took profits. Yeah, until after hours yesterday. You know what happened after hours yesterday? They announced they were selling 10 million shares on the open market, essentially diluting shareholders. Now, let's talk about this. Just like I called out yesterday, by the way, the S&P futures, 30 minutes prior, you saw buyers coming in. That was insider information leaking out to the powers that be, not me, not you, but the powers that be that knew that data on CPI yesterday ahead of all of us. All right, but now on Circle, take a look at this. So after hours, they announced they're selling 10 million shares, so diluting shareholders. Who do you think knew about that information when it gapped up and sold off all day? And then all those retail buyers that were like, wow, this is going to go back to its highs because these were great earnings. Not so much. They're all underwater, basically 10% or more now on that trade. And the stock, by the way, is lower. It's not down precipitously, but this is where the announcement came out yesterday after hours and dumped out. It's only down a little because the markets are so bullish. But again, these type of actions, I think we as a group have to call these people out. All right. This action, this shady behavior is honestly, it shouldn't be acceptable. It shouldn't be. And again, it is, unfortunately, basically people don't get prosecuted for this, but again, it's just not, it's not right. There's a lot of shareholders that were reacting to those earnings, buying it here. And again, now they're down over 10% on that trade. Either way, the level I gave yesterday, the point of me bringing this up was the level, right? This turned out to be a fantastic call from yesterday's game plan. If anyone took it, congratulations. Great job. 3D systems. Yesterday, I pointed this out. This was my sleeper hidden gem play. It ran up 30+% yesterday. I gave it in the pre-market. You could have had all you wanted at about $1.80 to $1.85 right here. And it subsequently ran as high as $2.42. Today, it is trading up slightly. I wouldn't chase it here. If you got in, that's up to you. You all can make your decisions on where you want to take profits. But again, 30% on 3D systems off the alert in the game plan yesterday. And by the way, I'm looking at new ones Tomorrow, I will try to have a new sleeper play or hidden gem for you guys, so you guys can potentially, again, I just bring this to your attention. You guys do with it what you want, but I do point out these ones that have that potential to make big moves to the upside. All right, CoreWeave. Let's get into some trades for today. CoreWeave reporting earnings, the stock tumbling to the downside, down about 9% in the pre-market. This may put a small damper on the semiconductor trade, although in all fairness, the stock market and investors are so bullish, it may not even matter, but it is down 9% on this chip stock. Now, if we look at where it went into earnings, it was almost vertical. So if you look at the pullback today, this is where it's trading today. It's only basically negating what it was up yesterday. That's nothing. Where would I trade this? I'll show you guys the level here. I would potentially only day trade this, mind you. This would not be a swing trade, but we have a pivot point right here to a gap fill area right here. So if this were to fall, and you can see again, so this low here, this high here, and then there's a gap fill right there. So these three levels are all within basically a $2 range. So if this were to flush down to about the 122 to 120 level today, I would potentially look for a day trade only off of this level. It may not get there. If it doesn't get there, so be it. No big deal. But that's the level for me. CAVA. Wow, what a drop on CAVA. Look at the fall here. Down over 20, basically down 23%, was down over 25% in the pre-market. One thing to note here, and this is worth mentioning. So the CAVA earnings, obviously, basically they said that they were lowering their growth forecast, which is the first time in the history of the company they've actually lowered their growth forecast. That's why the stock's taking a big beating. But one thing that I caught is the CEO said that consumers into their stores, into their fast casual restaurants, are becoming much more wary. And we saw this with Chipotle recently selling off on earnings. And the point of me bringing this to your attention is we saw this with McDonald's. Like a year ago, McDonald's was like, hey guys, the low end people making like 50K or less, they can't even afford to go to McDonald's anymore. Well, now we're seeing it creeping up to the next level up, which is from fast food to fast casual. And again, this is, to be honest, what I'm looking at in the economy is this like slow train wreck, right? It's not something where the economy's falling off a cliff. It's absolutely not. There's too much money in the system. The stock market is keeping the high-end consumer spending like they're a drunken sailor. But the lower to middle income now, it used to be just the lower income, now it's middle income inclusive, is starting to feel the pinch of a slower economy and inflation. And eventually the way this works is it's like a wildfire. It starts in the lower income and slowly it spreads up. We're seeing it in the housing market as well. Housing is definitely slowing. All right, so where do we trade CAVA today? This is a great level. I even like this as a swing trade level. Major pivot high from 2022 to 2023. Major, look at how it broke out right here. And then look, it retraced to the scene of the crime. That tells me this is a big level, $57.50. It may not get there today, but if it gets there in the next couple days, I would even be interested in it as a swing trade. All right, one more trade setup. This is a swing trade. Keep an eye on KWEB. KWEB, this is one of my favorite chart setups for an epic breakout. China stocks looking more and more bullish to me. I do think money rotation is going to find them. I gave you guys this trade early this year. It had a massive run on KWEB. I think this might have been this run right here where KWEB went from $27 all the way to $38 in a matter of a week and a half. But if you can break out above this level, this thing has legs, man. Holy cow, this thing has legs. Probably 20, 30, 40% upside in KWEB if it can break above $38. And KWEB, by the way, is the Chinese Internet ETF. So it tracks companies like Baba, Baidu, and others out there. All right, let's get into Bitcoin, guys. Bitcoin is creeping back up as the bull market continues in stocks and risk on. Again, the big thing here is just follow this. 123,200 to 300. That's your topping tail high. Again, on technical analysis, if you close above that, it negates the bearishness of the topping tail and it frees the chart from that encumbrance. So just keep that on your radar. Everything underneath, listen, the odds aren't amazingly strong to the downside, but it would be greater than 50% that this would roll over as long as you don't have a daily close above that level. Ethereum, look at this push on Ethereum, guys. What a move up. It continues up. I did want to show you guys a potential measured move here of what is interesting on this. If we take a look at this here, right? So we have this bull move, and then we drag this up. Look at where we are. So we are coming into some resistance. This would be considered a measured move, which again could be resistance. And then also on the daily chart, look at this. We're on the weekly. I flipped over to the weekly. We're approaching the all-time high. So you are starting to get into an area here where you could see some profit taking, double top, and the measured move. But again, Ethereum is the new hot commodity, right? It's the new hot topic here, and money is flowing in. You will get a pullback, though. There will be a pullback. For those of us like me that are swing traders, there's opportunity here. But again, just be aware that use the technicals appropriately. Solana, also getting a bull move here. Look at this beautiful parallel. Solana should head up to about 214 to 215, and then I would expect it to run into major resistance, high pivot, and high pivot. Tells me that this will likely be resistance. Gold, let's go to gold here. Gold, small, maybe inside bar, bearish flag consolidation after being rejected here. Again, if it breaks above 34.15, okay, bull play on to all-time highs. As long as it stays below here, odds favor a continued rollover. Silver, let's go to silver real quick here as I'm running out of time on these game plans. Silver is pushing up. If it gets back to 39.65 or so, there will be resistance there. We'll have to watch to see how it behaves. I am not long or short silver. If it comes down to 34.65, I would be a buyer. But again, right now I'm just watching to see which way it ultimately ends up going. Oil, we know oil continues to look weak. Today it's basically flat. $60 remains your downside near-term target, give or take. It's currently trading at $63 a barrel. And then lastly, natural gas had this great fall yesterday. It is bouncing. There's still no confirmation of a breakdown, but what a down candle yesterday. Little bounce today. Again, we'll watch this as now resistance, although minor resistance only, because it has not confirmed below. All right, so lots going on here, guys. As always, again, I always try to bring the alpha, the education, the trade levels for the day in these game plans, and I appreciate your time. I know your time is valuable, and I appreciate you guys spending a little bit every morning with me, and that's why I try to bring actionable insights and opportunities to these game plans Monday through Friday at 9 a.m. One note here, guys. As of Friday, starting Friday, my game plans will only be on the Verified Investing YouTube, not on my YouTube. So just be aware that you may come on Friday and be like, where the heck's the game plan? Just go to Verified Investing on YouTube, or you can come to verifiedinvesting.com, and then it's always on the homepage live as well. So it's one or the other, but it will not be, same thing with trading the close. It will not be starting Friday on my YouTube, just on Verified Investing's YouTube. So, all right, you guys have a great rest of your day. Let's go make some money. Have a good one. Take care.